Well, hello, traders and investors. I'm LA Little. This is your daily NeoTA wrap. We take a look at these markets from a neoclassical perspective, looking at fundamental charts, using that information to understand what's significant and how the tests take place so that we know where the market wants to go. Don't always get the signals, folks. Sometimes you just know from a trader sense that things could get ugly. Like today, right? A very ugly day. Really didn't have any signals to tell you it was going to be an ugly day. The only thing you have was the Russell. But the Russell's been screaming we had problems for a long time, and just took a long time for the rest of the index to care. So let's take a look at the numbers to start with here. I do this show 4 times a week, every Monday through Thursday, broadcast out before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. If you want to subscribe, you just reach up in the right-hand corner and do so. And if you want to share this with others, I welcome you to do so. Use Flickr, Twitter, whatever. I just, YouTube gives you a lot of opportunity. Just reach down there and grab one of those things and send it on to people that you know. As far as these markets, let's see what the numbers look like. Pretty much red. Matter of fact, the worst red day we have seen 6+ months. So that's how bad it was. NASDAQ comes off 2.5. You had the broad NASDAQ, that was the NDX, off the same. Russell down almost 3%. If you look at the, where is it? The S&P, there it is, 1.82%. And the Dow, 1.78. All the money rotated into quote-unquote what was safe, right? So everything's been leaving this for a couple of months. Everything's been going into these. Everything's coming out of those, going back into these. This is the forever rotation, right? Elsewhere, overseas, got hit, especially in Europe. Europe was due for a pullback. They finally get it. Let's look at the charts here. S&P, let's start with it. And if we start with the S&P, what do we have? Big down day. We've seen this before, right? This is not the first time, and so, it shouldn't be totally surprising. But this market goes up. If you review what happened, it finally set the high. Does an immediate retest regen, right? Comes right back into it, and what does it do? It just totally blows it away on this time frame. So this is the higher retest regen. This is the lower retest regen. All of those got blown away. And where does it go? Goes into these big bars down here. If I were to draw them out, I think that's the ultimate target if it's going to get deeper, right? That's the big wide price spread bar. And if you just kind of think about it, what did you do? You had trading up here, big wide price spread bar. Trading up above it, trading down below it. Where's most of the price been? And mainly in here and then up here while it lasted. Now you're back in the big bar and you not got another big day down. Don't have final volumes in here. They're not in yet. I'm sure volume expanded today. Just don't see it yet. That's the way the S&P looks on a daily. Now, if you go to the weekly, right, it's not looking that bad, except, it's coming all the way back 23.58. You're right there at 23.57. Swing point lows are kind of spread out, so that's not a bunch of danger. So this to me just looks like a normal pullback into a support zone. Looking at the monthly, it's a blip. It doesn't really mean anything yet. If you were to finish down on this month, you would have a bearish engulfing. If we move over to the NASDAQ, same sort of, you're going to see it on all these charts. NASDAQ does it, blows it away, changes trend, and coming back towards these swing point highs. Now, remember, on any kind of a breakdown, what you want to look for is the retest regens. These are the strongest of the indexes. So as they come back into these price points, you can almost guarantee there's going to be somebody willing to buy it. And if you line them all up, you got 3 of them. The area that looks most interesting, of course, is the area where they all overlap. Here, here, right down there. And so that area, if it were to get there, that's another 100 points lower. That would be the focus group. I don't think it's going to get 100 points lower to start with. I think you're going to get what I talked about before. I mentioned this to members, and now we're finally seeing it, although it didn't play out quite the way I thought it would. You're finally seeing the big gap down, right? You're going to see some sort of a bounce. If it's a small bounce, that means this is stronger than you think. It's going to really deep down in here. If you get a larger bounce, right, then you get a smaller cut, and then you come into the tops. And so the question is, what is the bounce going to look like? Now that we finally have breakdowns, in other words, now that we finally transition trend, we're finally going to get a retest regen zone, and you can already see the charts have drawn it out for you. There it is. That's the area. That's the key one on the bounce. If you can't get over that or through that, then that sets up the ABCD structure to the downside. Let me go back to the S&P. So you got the same guy here, and I didn't point this out, but here's your bearish retest regen now. And notice how many times these things will line up to where the bottom third or so is the tops of bars on big breakdown bars. That's usually the way it happens. And so that's the way this thing is set up. Let's look at the, well, the NDX looks pretty much the same. Let's go to the Russell. The quote vendors, for whatever reason, have decided they're not putting quotes out on time anymore, and so I'm 2 days behind on this guy. Again, I'm sure volume expanded here. Matter of fact, let's just quickly look at the IWM as a curiosity. Yeah, volume expanded. And you're going to see it on the indexes themselves. So going back to the index, so you got volume expansion, and what are you doing? You're coming right back into the big bar. And the bottom of that bar is the ideal target. Top of the bar, that's what it was playing with all this time up here, right? Couldn't get over it. Or excuse me, couldn't get under it. Now it does. You got another one of these wide price spread bars. Now we've seen these, big V-shaped reversals before. We're going to get another one. I have no idea. All we have to do is stay in tune with what's happening now, and that is that this has set up as the bearish retest regenerate. It's a wide price spread bar. Again, the bottom third, if you come back immediately, it would be the top third, and that's right where that bar comes down at. So I think these areas right in here are the key areas on the way back up, but you were a long way away from it. This was a blowout day. They were throwing the babies out with the bathwater today. The other thing that happened today is you saw those sectors that have been golden start to give it up, and start to give it up in a larger way. Here's the SOX. Blows it away, right? 5 days. Right back into the swing point highs. These would be the test as they come back into these. And one thing I didn't talk about, there's a lot always to say when you get a big day like this, but if you go back to the S&P 500, what do you do on a day like today? You essentially go back to where price was 3 months ago, right? I mean, the lowest prices 3 months ago, that's where we're at again. If you go to some of these other indexes, like for example, if we go to the NASDAQ, it's not as bad, but a little bit more here, and they're back to where they were a month ago. You've essentially just took away a month's gains in one day, even on the NASDAQ, on the strongest of the indexes. That's what these grinders will do. If you want to remember one thing out of this, and I've been telling members this for a long time, when you do this grind stuff where you just day after day do this, right? You don't have any backing and filling. When you have no backing and filling, there's nothing to support this when the selling finally comes. And typically what happens is you blow away a large portion of time, the gains associated with a large portion of time. Now, if those gains were sideways, right, you can blow away 3, 4, 5 months. And what happens? Everybody that bought up here, they're in losing positions now. Let's go to the back to the major sectors. So I want to see how close we are, and I'm going to pull the weekly ups. And just out of curiosity, I want to see how close we are to breaks on weeklies. And we'll just flip through them real quickly. So here, a long way away. That's on the SOX. Basic materials, no, not that far. One buck on a 52, that's about 2%. Energy, they've already transitioned once, and they're close to transitioning again to bearish. Financials, very close to blowing away, right? That's going to change transition, or it's going to transition the trends to something else. Look at here, XLI. You have it in two. They're lined up, congruent, right? You blow that away, you get a faster move to the downside. You'll come all the way back into that November spurt. Some of these stocks, I was looking at like, what was it? One of the copper stocks. The thing is already, it went up 40% on the November election, came back 40% since then. It's all the way back to where it was. XLK, of course, this has been the strongest one. I doubt it's close, and it's not even close. XLP, let's see how close this one is. Not bad. It's got a ways to go. XLU, and that one's probably fine, and it is. XLV, and that one's got a good ways to go too. XLY. Yeah, so you've only got a couple. You got the financials, the energy, basic materials about 2% away. So you got about 4 of them that are that far away. If I go back real quick here to the indexes and quickly see how far away they are. This one is, this is the S&P. It's 23.22. We're trading at 57. That's 30. That's not that far. It's 1%. 1% you could break swing point lows finally. A long way to go there, and the Russell's actually pretty close. And the Russell now is just like we were talking about the XLI. It's set up to break doubles if it breaks them, which is not a good thing. And so that's the way those guys are. So we're not in the danger zone yet, folks, but if we come down there and we start breaking, then things get a lot more dicey than they have been. Had a request here to take a look at the currency, so we'll do that. As I'm pulling that up, I may or may not have a show tomorrow night. So if I do miss, it's a result of some travel plans. So we'll see how that works out. Hopefully I can do the show. Okay, FXE. So the FXE is coming back into, finally, the retest, regenerate bearish on a weekly. And I'm just using the weekly charts because that's where we're at. That top, 108.03, we are at 108.01. And this is 106.53. This is the first time back. Okay, so here's where you gain some information. The first time back on a retest regen should only go the bottom third, right? You should only see the bottom third tested. That's about as far as it should get. This one went right back to doing a full retest regen. When you see that, right, what that's telling you is that this is stronger than you think already. And if you look at this, this has been doing ABCD structures on the way up, and it's been completing every one. And if you project this last one, it actually gets you over it because there was almost no pullback. And so, you know, this to me looks like this is not quite done. Whether it pulls back from here and sets up another nested ABCD structure to actually get there, you know, another little nested one. Either way, this looks like it is going to try to get up there. That's the FXE. Let's look at the Japanese currency. And here is a very different picture. We'll go to the monthly on it. Yeah, because this one did a full retest regen on the monthly when it shouldn't have as well. And it finally did come back deep, but now has reversed and trying to come back up. Let's go to the dollar. All right, on the dollar now. So the dollar had already given us warnings previously, and that is that when the dollar broke here, right, this transition here, that finally broke this swing point low. What did it do? It came back in third of the way up. Should have got a full retest regen, right? Should have came into the top third. Didn't. Started back down this week. Now it's escalating on the downside. Now it's doing a bullish retest regen. This is the second tag back, so this should get to the bottom third. This should get down into this area. So it looks to me like, and given what I see elsewhere over here, looks to me like it's going to try to do exactly that. So just like we just talked about the FXE, the dollar seems to mirror that, and that we got more pain to go here. 24, 95.25 area on this push. And finally, let's look at the long term, and all the big stuff is in that area. You know, 4 weeks ago, not 4 weeks ago, 2 or 3 months ago, you wouldn't have thought that this was going to do it. You would have thought it would have held this top area, right up in here, held that area and got the push, right, and try to break it out. Big, long consolidation, breakout. So far, this is looking like a deeper consolidation, and from what we just saw, looks like it's going to come into that 24.95 area, which is right into the ends of these long tails. I would expect you to get a bounce from there, but this is a big consolidation. It's not done, and where we go from there, not quite clear, but the clear part is a little bit more to the downside before this is done. 25.18, that'd probably be another % or so. All right, I don't have much else to say. What I think is going to happen, well, from what I see, I think there's a good chance, given the blow off today. I mean, that's the worst day you've seen in a bullish market. Buyers will come back. It's just a question of how fast. I would think that you're going to see a bounce tomorrow. You know, the better thing to do would actually be to gap down in the morning. If I were a buyer of this market, or wanting to be a buyer of this market, you know, what would be the ideal case in the morning? The ideal case would not be a bounce. It would not be a gap up. The ideal case would be a gap down. Scare the heck out of them, right? Just get them hanging and throwing stuff out. Come all the way down, you know, you're 23.57, come down another 10 points or so, get down into the top of this low, the high of the low. Those are always good places to look. Come down into this area, maybe come down as far as there, but come down on a gap down. Everybody's throwing out everything, and then you bounce, and you actually set up some small structure to take you farther up. That would be the ideal case. I expect they will bounce it, and they'll start it up, and they'll fade it right back down as a result. That's it. Have a great one. I'll try to catch you tomorrow. If not, I'll see you next Monday. Take care. Good night.